Hi everyone, thank you for tuning in. I'm Ken from Crypto Trading KS. My mission is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. I focus on the institutional mindset. If that sounds good, please subscribe to YouTube. This is a special episode about the KS model. The KS model is a crypto technical trading model based on institutional price psychology. I first wrote about it back on the 25th of May. That's around 190 days ago. I put this article on Medium predicting $486,000 for Bitcoin by May 25th, 2022. The link to this description, or the link to this article, is in the description of this video. It's very much, this particular article just goes through the mechanics of the KS model. What I want to show you is something very specific, so we'll just scroll down to the last part. This is a technological adoption curve put out by GMI. It basically shows cryptocurrencies are being adopted at a far greater rate than the internet. The internet adoption is here in this white line. The scale is from 1992 to 2006. This basic gold line is the adoption of crypto from 2016 to 2030. We can see that in terms of relative comparison, the adoption of the crypto industry is around 1997. There are 8 things that I would like to take you through when looking at the KS model so you can understand it better. First of all, point number 1, there are 3 phases to every run, running from halving to halving. There is a bull market psychology, where the psychology of price action is overwhelmingly positive. The crowd expects higher prices. Price takes off to the moon, hits the moon, and the rocket of price goes up to the moon, hits the moon, and the moon says, "Get out of here, rocket, go back to Earth." And that hammers in the all-time high of that bull run. There is a really important mathematical quality that I'll discuss later about all-time highs. Then, as the rocket is coming back to Earth in the bear market, it reaches a point of capitulation. Capitulation hammers in the low of the bear market for that particular run. Then price enters consolidation. Consolidation, you can see, can waver around quite a bit. You'll also notice that there are a lot of lightning bolts. What are these lightning bolts? They're actually black swan events. Having been involved with financial markets for more than 3 decades, it's really important to look at price outside the actual price action. The economy influences the price, like you can see back here in 2013. In October 2013, we had the US government shutdown, US-North Korean conflict, Venezuela expelled the US diplomat. That actually caused a 33% drop in Bitcoin's price. That is quite significant, and that's not part of normal price action. You can see many black swan events playing through here, and they're everywhere. This is really important to understand. Price is linked to other markets and world events. So let's go back and have a little bit of a slower look. This, on the 24th of August 2015, was the China crash, Black Monday. We can see price bottoming out. And what you can also see, when we have big reductions in price, that's the absolute best time to buy. These incredible sharp sell-offs are what professional traders and institutional investors are all about. If you look at the US liquidity crisis, the COVID crisis, on the 12th of March 2020, a lot of commentators look at this as normal price action. It is not. It was a black swan event and a very, very significant sell-off across all capital markets. What you can see here is that black swan events actually suppress price. That is what actually happens. But when things get into the bull market psychology, things start to really take off. Point number 3 is that we need to compare same psychologies. Before the KS model, people were comparing bull market psychology to consolidation psychology to bear market psychology. Having lectured first and second year stats for many years, I always look for mathematical comparability. It's really important to compare like psychologies. The bull market sunshine is always compared to the bull market sunshine of previous cycles. So what you see when you look at a particular graph, such as Bitcoin, we have the 2012 halving cycle between the three phases, the 2016 halving cycle between the three phases, and the 2012 cycle, and it will be between the three phases. When we look at comparing, we always compare bull market to bull market to bull market. If people don't do that, they're going to get erroneous conclusions. We always compare bear market to bear market. That is incredibly important to do. When we also look at the particular graph, we see increasing length. Now, what does this actually mean? It is mathematically undeniable that the cycles are getting longer. Now, how can I say that? We simply measure from the bull market psychology. Having a look at 2012's halving cycle, the bull market psychology segment lasted 367 days. If the cycle length was not increasing, the 2016 bull market psychology segment, or the 2016 bull market, of course would last 367 days up to this blue dot. That's why I call it the blue Bitcoin sun, and the 2016 halving cycle, the green Bitcoin sun. What do we see here? The 2016 halving cycle actually lasted 526 days, not the estimated 367 days that everybody thought it would last. It went on 43% more time. That's 159 days longer. Now, what do we see in the current bull market psychology phase, the current bull market phase? We can see the 2012 halving cycle of 367 days, the blue dot. When we look at the 2016 halving cycle, 526 days, we see the green dot. We know that price is increasing, the cycle lengths are increasing. Previously, there was a little bit of confusion between this blue dot and this green dot. That's just simply the length of the previous cycle. When you see the blue dot, this is the 2012 367-day period here. And the green dot here is this 2016 halving cycle for 526 days. I've just labeled that out more clearly for you. The KS model also fixes up a common misconception about the 4-year cycle. The 4-year cycle has never been 4 years. Let's have a look at the 2012 halving cycle. That actually lasted 3 years, 7 months, and 1 week, with an average block time of 9.04 minutes. When we look at the 2016 cycle, that lasted 3 years and 10 months with an average block time of 9.6 minutes. A lot of people say that it's going to be every 10 minutes. You'll hear a lot of people talk about 10 minutes. Now, why is that? If we go to the white paper of Bitcoin put out by Satoshi Nakamoto and search for minutes, we get 1 hit. A block header with no transactions would be about 80 bytes. If we suppose blocks are generated every 10 minutes, that's where it came from. The next thing to discuss is mathematically protected all-time highs. These are really important things to understand. I believe a lot of people miss out this understanding, and it can cause some very unusual analysis to occur. When we look at the 2012 halving cycle, the bull market peak, we can see that the mathematically protected high of 1163, once crossed in the next bull market, didn't come down and get violated. We can see for the 2016 halving cycle, the mathematically protected all-time high of 1966 will not be crossed. And we can see that also applies to the mathematically protected bear market lows. Bear market lows do not get crossed by previous all-time highs. This is the level of protection I'm talking about. What we see is an all-time high is always above a previous bear market low, and we would expect that to continue. Many people think that price will not reach specific levels, and if price reaches certain levels, it will actually violate that mathematically protected all-time high. That's why I put in a minimum high of $132,418 as an absolute minimum, because if that minimum high is reached and we get a specific level of drawdown, average to bear markets in the past, we will just stay 1% above 1966. That's an absolute minimum high. However, that is not how Bitcoin works. It's not designed to do that. The KS model was one of the first to predict bear market lows, and that bear market low I'm predicting to range between 43,320 and 72,900. Heading towards 0.8, the important thing to understand is this curve represents adoption of the next level of the internet, Web 3.0, the Internet of Value. Heading back to the technological adoption curve, when we're looking at the uptake of internet users from 1992 to 2006, we had an explosive growth rate. I was actually involved in setting up an internet service provider in 1993, right at the dark days of the internet, when the telecommunications companies wanted to kill the internet and the government wanted to kill the internet as well. I see so many parallels between where we are now in crypto and where we were in the internet back in 1993. With my estimate of the bull market peak on the 25th of May 2022, it was all about the adoption. Combined with all the other factors in the KS model, one thing to bear in mind, adoption is increasing. We have an increasing number of ETFs. It's really good to see more spot ETFs come out rather than derivative-based ones. Countries are adopting Bitcoin and crypto. Public companies such as Michael Saylor just purchasing more Bitcoin, very, very good stuff. And we can see private companies, but we actually look at the percentage of the 21 million Bitcoin that will be in existence from 2140 onwards. It's only 7.118%. And if we look at countries, they only hold 1.253% of that potential total supply. I've spent my entire life surrounded by inventors and being quite inventive myself. I actually wrote an article, Why Bitcoin is Misunderstood by Experts and Why Do Experts Regularly Fail to Predict the Future. When we look at heavier than air manned flight, before the Wright brothers actually did it, so many people, so many incredibly talented people in high positions within the scientific community said it was impossible. And we actually have a descendant of the Wright brothers inside our community. How incredible is that? Hello, my friend. Before flight was impossible, Lord Kelvin, you can have a little read through this particular article. You'll see that there's so many people who were incredibly talented at the heights of their scientific careers, were involved in aviation, but literally couldn't see heavier than air flight ever being a reality. What I've done here is put the 6 stages of invention. My ancestors invented many different things. They were incredibly creative people. As a family, we discuss things like this, and we understand that there are so many barriers to people understanding discontinuous invention. It's really, really interesting. This article will give you a little bit of background and could be very eye-opening. It's really important to understand what Bitcoin represents. A lot of people think that it's digital currency. It is not. It's an evolution of the internet. It's something else. In our lifetimes, we'll witness the disappearance of tangible physical cash, and it's almost there. Having a look at the visual capitalist, all of the world's money and markets in one visualization, what they say here is 7% of the money supply is physical. That is why if you go to a bank and you want a certain sum of money out, for example, to buy a house or to buy a really expensive car, you may have to come back a week later because they can't find the money. That's why central banks must issue central bank digital currencies. They have to, because the money doesn't exist. It's already intangible. If we look back into the past, we can see that horse and buggies used to be the predominant form of transportation. And we can see back in 1889, this is not a tourist thing. This was how people got around. We know that the horse and buggy industry was put out of business by the car industry. And this is happening all the time. Can you remember LP records? CDs came and put them out of business, and MP4s came and put CDs out of business. This evolution is happening. What about Blockbuster? What about VHS and beta tapes or beta tapes? My goodness, everything changes so quickly, yet we resist change and we don't embrace it. The key to great wealth is being on the other side of invention, being the instigators of invention. And that's certainly what all of us are doing in the crypto market. What a time to live. Think about the cities of the future, autonomous travel, interstellar spaceflight. My goodness, the world is just exploding up. We can see that the future will be very unlike the present, and cryptos will play an incredible role in that. Can you imagine taking fiat currency with you to Mars? It's not going to happen. It needs to be digital. When I look at the KS model, which is a crypto technical trading model based on institutional price psychology, and the institutional price psychology is a really, really important term. I see all of these adoption issues. I see the switching out of old technologies, and that's why I estimated the peak at around the 25th of May 2022. I'd like to do a shout out to Ted, who's doing fantastic work, and the CTM community as well. Tech Dev doing fantastic, Michael, Rational Root, and others. Ted's aligned various models put out by various thought leaders, and he's done an absolutely fantastic job. Well done, Ted. You can see the KS model, Ted's represented here. The actual flow is a little bit different than what I've estimated, but Ted's just looking at a normalized average distribution for these particular models, and he's done a really, really fantastic job. Michael's block-based model is also terrific stuff. There's a lot of really clever people in the crypto industry. What we can see here is gold's price fitted to Bitcoin's trajectory. Very clever stuff. And the CTM and Ted's manually adjusted model. Very, very good stuff. And there's one other model I'd like to show you. This particular model is put out by Year of the Bull. Year of the Bull is doing fantastic work. We can see, looking back to the past cycle, a rounded top, the previous bull market cycle, basically looking at how the cycle will blow off in towards the end of the cycle. This is really important. Exponential blow off tops hammer in bull markets. And the Year of the Bull has used a fractal to try to explain how that could look going out. And he's put the cycle out a little bit further, which is absolutely fine. Everybody has their own perspective, as you can see. The reason I actually wrote the Medium article 190 days ago was so many people were predicting the end of the bull market around October 190 days ago. And I just basically said, I don't think that that is possible based on running the numbers. So I wanted to share that with the crypto community. we've seen that what is playing out right now is a lengthening cycle, and you can see plainly that it was always evident inside the numbers. 367 days for the 2012, 526 days for the 2016. Of course, the cycles are increasing, and they were never 4 years, ever. Also, some little bonus for you, the bear markets are actually getting smaller. Comparing the bear market of 410 days in the 2012 halving cycle to the bear market of the 2016 halving cycle, it went 11.5% less, or 47 days less. Also, the consolidation of the 2012 halving cycle was 542 days. It was 513 in the next cycle. That's a 5.4% reduction. What does it mean? The bull market cycles are getting longer. The bear market cycles are getting shorter, as well as the consolidation period. It's absolutely to be expected as the adoption kicks in with crypto, and especially Bitcoin. I'd recommend following Michael. Michael is doing some really interesting work. On Twitter, he's at Fairfree Digital. I'd also recommend you follow Ted. Ted Boy DSTO. Ted is doing really great work and is a very good guy. And of course, if you'd like to follow myself, I'm at StanDfielD Can. StanDfielD has 2 Ds, StanDfielD Can. And you can reach out anytime and direct message me as well. If you see any particular black swans or anything that you would like me to add to the KS model, I'd be really happy to do that. The KS model is for the community. If you have any questions about the KS model, please let me know in the comments below. One thing that we might like to just quickly go through, what we see here is Bitcoin's price being supported. It's come back to a support line. We expect a bounce. The RSI is very oversold at the moment. We would also expect a bounce. Things are looking quite good for Bitcoin, and we've got a lot of spot ETFs coming out of the woodwork now. Adoption is really good, and it looks like India may be softening its stance on crypto as well. All in all, some pretty good movements in the crypto market. One final bonus, that I expect the most likely range of price will be between 288,000 to 486,000. Of course, I expect the 486,000, but it's always good to have a range, just like what we do with bear market lows. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.